Hey guys, hope you are all having a fantastic day. It's been a while since I posted a video. I've been pretty busy lately, but I am finally back. Today we are going to talk about various sectors of the economy to give you guys an overview of how things are evolving. The situation is only poised to get worse now, both in the short and long term. For example, we have seen smaller regional banks slowly go out of business. However, the media has been very vocal about how well the US government is managing the situation by quickly stepping in to take over in order to protect consumers. However, this is a very narrow assessment of the situation. Why is nobody talking about how these Fed policies are helping the already too big to fail banks become bigger? America has a huge problem in the way it manages business. It employs capitalism for the smaller business and most citizens, but then applies socialism for businesses with deep Washington ties and large amounts of money. This existential problem is only bound to get worse over time, and it's already starting to sound alarms as many of these regional banks are essentially getting bought out by giants such as JP Chase. Today's content is going to be very fun and important. Be sure to thank me by joining the free Discord link in the video description for more content including day trading alerts, which we have been absolutely crushing this week and last month. With that aside, let's get started. You know something is up when even Bloomberg is making headlines publishing the obvious to the mass audience. Too big to fail is a problem that is bound to worsen, and you will be seeing it unfold before your very eyes in the coming weeks and months. A couple days ago, First Republic announced that most of their depositors had withdrawn their money, essentially tanking the stock to near zero levels. It wasn't too long before news quickly spread out that the nation's largest bank is set to acquire the failed institution's assets. First Bank made a lot of headlines because it was a pretty big bank, but what is not being reported are the tons of smaller individual little regional banks also turning over. For months, while the corporate media has led the charade that the economy is improving, these institutions have slowly been failing, and their assets quickly being taken over by larger banks. When we trace the problem back to its roots, we easily find the culprit, the Fed, and there is no consensus to go further. However, the whole expectation of further rates is going to take a back seat, because we are now in a serious spot where the changes are going to start causing the economy to bleed in various parts. Think of it as having a rope around your neck, and the person pulling it simply stops. Just because they aren't applying more pressure after tightening it like 6 times doesn't mean breathing will be any easier, since the rope is still tight. In fact, without enough oxygen, you are likely to still pass out and potentially die if more oxygen to your system is not restored in urgency. The same analogy can be applied to the economy. Markets are forward-looking, so it's hard to predict how they will react, but the economy as a whole is set to incur a lot of pain for millions of people. In fact, the picture has gotten so stark that the government and these too big to fail corporations have stopped their little propaganda charade saying a recession is unlikely. Many big banks are already telling customers to prepare for one towards the later half of this year. What you must do, as a concerned citizen, is think, who is set to benefit the most out of a big recession? Because obviously it won't be you or me, or the mom and pop shop across the street, nor my friends or neighbors. It's never the middle or lower class that gets to benefit. In fact, we still haven't even fully recovered from the recession in 2008, and this one is not set to be any easier outside of the housing market, which is something we will certainly be touching later on. No, when it comes to the financial sector, the one that is set to significantly benefit from a recession are the likes of companies like Wells Fargo, Bank of America, JP Chase, and the rest of the well-known bunch that skipped prosecution after enabling millions of Americans to lose their jobs and houses in 2008. Let's dive a little deeper into history, because the lessons of the past will give you great insight into what's coming. The failures of First Republic Bank, the one making headlines right now, are not unique at all. In fact, these failures that led to its dismal end have been enduring since the 1980s. In 1987, there was another First Republic Bank that went under. That Texas-based First Republic's downfall was the fall of oil prices that occurred back when the Fed's rate hike and double-dip recession took place. That's right, the exact same thing happening now happened back in 1987, all led by the Fed, albeit I will say they weren't as irresponsible as they are now. So, this Texas-based First Republic Bank's property loan book essentially plummeted in value, so they tried to find a way out of this hellhole by finding a merger with another troubled Texas lender known as InterFirst Bank. However, this would not come to pass, as the issues surrounding the Texas bank eventually found their way to the FDIC, who was forced to step in before any real merger happened due to the gravity of the situation, and instead pawned off the bank to NCNB, which is the precursor institution to what you know today as Bank of America. That's right, before they became the Bank of America we all hate, NCNB was just an acquisitive southern state super-regional bank, who went on to rebrand to Nations Bank and then a little later on went national in another merger, effectively becoming Bank America in 1998, becoming the biggest bank in the nation. Given the double-digit IQ of whoever decided to call it Bank America, the corporation eventually decided to add that of in the middle to make it a little easier on the ears. So, as you guys can see, First Republic's failure that we are watching right now isn't unique or new. In fact, many of you in my audience were probably alive back when this happened in the 80s. History might not repeat itself perfectly, but it does rhyme disturbingly well. What was the result for the acquisition of Texas-based First Republic Bank for NCNB? Well, they went from being the 17th largest bank to the 10th, quite a jump. As disturbing as this is, and it's very disturbing, we live in a timeline where competition is only for the biggest. JP Morgan Chase, which is the current largest bank in the country, and I would argue the second most powerful institutions in the world second to BlackRock, is the one doing all the taking now. This bank is literally in the midst to take over the second largest bank failure in the history of this nation. The corporate media and the government are acting like the actions they are taking in pawning these regional banks to the likes of JP Morgan is an act to secure the nation and protect people, when in reality they are just feeding the bloated monster in the dungeon. They are making this already too big to fail institutions even bigger. Many of you don't even understand the size and reach of JP Morgan, so let me quickly add a couple wrinkles to your brain. This bank is an amalgam of four of the biggest financial institutions that stood independent of each other years back. These four horsemen of the apocalypse were the Rockefellers' bank known as Chase. This Chase Bank ended up merging with Chemical Bank in 1995. Chemical Bank was already the byproduct of another merger between Chemical and Manufacturers Hanover in 1991. In the year 2000, these entities all merged together into JP Morgan, which is the behemoth we have today. However, one key aspect to the success of JP Morgan Chase that they were able to retain is the ability to be so effective at their business in so many ways. Right now, JP Morgan Chase serves as a lender to corporations, custody banks, investment banks, retail banks. Now they are set to earn billions and billions of dollars every year through First Republic's incredibly rich clientele. The centralization of wealth in this country at the corporate and 1% level is unprecedented, it's corrupt and even worse, it's growing with no end in sight. I want you guys to closely pay attention to the news, because the likes of JP Morgan and friends are the ones that are going to be making an absolute killing in the coming months. You see, back in the 1930s, the United States did acknowledge these things to be a potential problem, which is what led to the Glass-Steagall Act of 1933, which divided commercial banks from their investment banks. But in the 1980s, of course this not being a coincidence at all, the rules on these protective acts began to be eased away, or outright discarded. And this problem is now setting up the stage for what's to come, specifically for the Fed, as I am about to explain. The recipe for success on the hoarding of wealth to the few all stems at the Fed, whose approach to solving monetary problems is always catching up to problems too late, forcing aggressive rate hikes that create these vacuums across the economic sector ripped for opportunity for larger banks and wealthy individuals to further consolidate their power. I think the next move will be to announce one last rate hike before a pause, because as I have said in older videos, the Fed is going to want to also test a hands-off approach to wait and see how the economy reacts to everything they have done. Think of it as cooking soup where you are constantly mixing ingredients, but eventually need to lay off to wait for things to come together on their own. Remember, monetary policy acts with a lag. What the Fed implements now is felt months down the road. The only pain you get in the moment is that of the stock market reacting, as it is forward-looking in its nature. Right now, banks are saturated to the brim with cash thanks to the fears about regional lenders, which led to an increase in the deposits to them, something we touched on earlier in this video. They are also offering lower rates on time deposits, forcing smaller banks to offer more as well. This is making the US banking system incredibly concentrated, which is bad for lending because the companies that rely on the banking system for loans will be too dependent on the small banks since large ones can use capital markets for capital. With this in mind, experts are now saying we should expect a credit crunch to grow. This right here, this we just talked about, is that the US yield curve is pointing to a likely recession in a way that's very close to that which took place in the early 1980s. This puts the Fed in a very weird spot, because if they tighten policy too much, it will steepen those yield curves, and if they start cutting rates too much, it will also steepen the curves even more. They have a hard job maintaining a balance, but in the meanwhile, this is going to take a toll on bank balance sheets. And this is where the topic switched from banks into commercial real estate, because as Berkshire Hathaway's Vice Chair Charlie Munger said, commercial real estate is where the bodies are buried. I will not go over commercial real estate in this video. That later half of this equation is going to be released this week on Thursday. It's impossible to predict how well the Fed will land, and how bad things will get. There is of course a chance the Fed does a perfect landing and the impact on the economy will be minimal, but I am not confident in that scenario. Inflation alone has barely improved at all, and the serious cut into American spending will have radical effects that could last years. Without touching on real estate, I think the worse the situation gets, the better these too big to fail corporations will have it. Like I said, they are getting all the deposits, all the help from the government, and their outlook looks fantastic at the expense of everyone. The Fed's actions are directly helping allocate the wealth of individuals and corporations all centralize in these already behemoth institutions, doing away with any sense of balance and normalcy. This of course, in the long run negatively affects citizens. There is a reason why monopolies are deemed anti-competitive, as they restrict the most important values that a capitalistic society could offer. Shout out to Edward Harrison and Bloomberg for their amazing pieces and insights which helped me make this video. Thank you for listening to its end. Join the Discord if you are interested in the best day trading alerts out there. Hope to see you on the next one. To the moon.